Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest in the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today's guest is Sean Levine, and he's Managing Director over at Entoro Capital. Sean, welcome to the show.
Hey, Adam, glad to be here.
All right. I'm happy to have you here, and I know that you were sent over to us from the Deal Flow events guys, Charlie and Philip over there. They do great work, and I know you're going to be participating in the Reg A and Crowdfunding Conference, which we've been covering coming up later on this month. We're in June recording this, and this will definitely be released before the event itself. I guess just to get us kicked off here, so the conference, are you excited? Have you been to one of these before?
Yeah. I went last year was my first one, and it was good. And it sounds like talking to Charlie and those guys, like they expanded this year. It was just Reg A, and they pulled it over into crowdfunding as well, or Reg CF. And it sounds like the number of issuers and potential folks who want to use this, it's jumped nicely year on year. So I'm excited.
What keeps you coming back to these conferences? And I always like to bring this up because I'm a conference goer, man. I feel like good things always happen whenever I go to them. I make contacts, I do business. I mean, what keeps you going back to these conferences?
Yeah, no, that's a good, I love them too. And first, you got to get out there, right? Like it's what this is too. You got to make people, we're kind of a boutique shop. We're active in the space and have been for several years. We have a broker dealer arm. We help subject matter expert on all this stuff, the crowdfunding and Reg A and everything. But because we don't aggressively market, so we take on the clients we want to take on, really. We're pretty selective. And so it's good to get out there and talk about what we do and make sure people know who we are and how we're different and add value. And then also think about, especially after COVID, everybody just kind of buttoned up and got even less social than before. But even before, you got to get face to face with people. That's how you build relationships and those into long-term partnerships and client relationships and all that stuff. And there's only so much you can do remotely via email. And, so that's part of it too.
Yeah, that to me, I mean, I still like the in-person, and I feel like there's been a resurgence of events and other things like after COVID, and now when you go, I feel like people are always just so approachable. Some things have changed. It's like everybody's like, oh, there's people, they're in person. What's going on?
Well,
we're not on a Zoom call.
So many of us work remotely now too, and that's different.
Yeah.
So to actually get in front of people, like before, it was just like it was fun. You eat, you drink, see your friends, but now it's like, oh, people. Yes, this is what I needed.
So how'd you get involved in the crowdfunding space? Like what drew you in?
Yeah, it was a weird path, kind of circuitous. I'm a lawyer. I don't practice, but I have JD and I did practice for a while. And I got into markets, financial markets, and got 5 securities licenses, analyst and principal and all that stuff. But then after a while, I ended up rolling over I was an equity analyst, and I became a commodity analyst, oil and gas and all that. And then at some point I met this really interesting guy who was part of another niche industry, financial publishing industry. It's like stock picking newsletters and things like that for retail, like non-accredited regular investors subscribe to these things that they want to hear about undiscovered opportunities and not just go buy Apple or whatnot, that there's anything wrong with Apple, but like stuff that everybody talks about. It's kind of people that have enough money to know that they need to manage it and get some help, but maybe not affluent enough to go have an investment advisor or something like that. So there's this donut hole of opportunity. And so they come to these newsletters. And he was the editor-in-chief of this pretty good-sized publishing house, had a bunch of different newsletters. And we talked, we ended up teaming up at some point. It was an interesting idea to come over and do oil, gas. My buddy was a coal and steel analyst from Wood Mackenzie. He was ready for a change. So we teamed up and went over there and didn't end up, we had a decent run, but they weren't quite able to sell that very well, but it ended up revolving over. And then I became head of research at this publishing house and testing theses and doing fundamental and technical analysis and all this stuff. But while I was there, like a lot of these people are just very salesy. Like they know how to sell. They know how to relate to the regular investor, not the affluent folks who are going to read all the disclosures and everything. But to get people excited about an idea and people have a relationship with people that they're investing in and things like that. And so toward the end of the 2010s, they, for the first time, the Jobs Act had passed. And it took a few years for this stuff to mature, this crowd investing stuff. And it finally kind of reached a critical mass in the late 2010s. And our editor-in-chief was very forward-looking, and he saw, hey, this is a whole new potential market for us and things for us to talk about that nobody's talking about. So they launched the other newsletters were like microcap and options trading and stuff like that. Well, they launched one of the first ones focusing on Reg A and CF crowdfunding stuff. And the response from the subscriber base, the regular investment community, was nuts. They subscribed hand over fist. They were extremely receptive whenever a recommendation would come out. I'd hear secondhand from some of these issuers, like they were thanking us and they loved us because it'd be like, oh, 15 million came in over a month because you guys recommended it. And they weren't charging. Like it was earned media. They made their money from their subscribers who wanted this service and wanted these recommendations. So they didn't charge it. So it was like the perfect storm for these issuers who were fortunate enough to get coverage, because we'll get into this in a minute, but there's a lot of marketing costs that go into this often. And they didn't have to pay all that. And they got a huge win out of it most of the time when they got recommended. So I saw all this, and I had recently affiliated with eToro as not really my day job, but just to say I had securities licenses, and if you don't keep them with a brokerage, at some point they expire. And I was starting to get some deal flow and things that made sense for me to do that. So I did it. So I'm like the only guy over in publishing land who's also licensed with regulated brokerage. So I go over to our managing partner, Jim Rao, and I said, hey, I know we aren't we were nickel BD, a smaller private placement kind of focused broker dealer. And I said, I understand why everybody sees that this is a new space and there could be opportunity, but those kind of groups, they don't have a Rolodex of millions of retail investors. They have affluent, they're trying to fill private placements. They have affluent institutions, things like that, cutting hundreds of thousands of dollar checks, not $500 or $1,000 checks. And there's no unit economics there, and they don't have the connection. So I said, look, I think I figured out a path. I found the distribution. How we try to plug into it is we got to figure that out, do it the right way and everything, but it's there. And I know where it is. And I kind of got the jump on the industry with knowing that. Everybody didn't. It was a new development. So because I was in it, saw it. So I went over, went in, leaned into eToro, and we stood up, we did all the research we needed to do and stood up. First we did Reg A, and we've done that for a while. And more recently, the Reg CF, which is a smaller, Reg A, you can be an issuer and raise up to 75 million selling to retail investors. Reg CF, you can raise up to 5 million also selling to retail investors, but it's a lot more streamlined, and it's because you're not trying to do as much in terms of the overall market. The regulators, it's faster process, cheaper process. So I had been recommending over the past several years all these clients. I'm a straight shooter, and I'm not just trying to generate onboarding fees. I want to work on deals that are going to work and that are affordable for clients and make sense. So a lot of times I ended up saying, like, really you guys should do a CF at the stage you're at, so on. So rather than just referring those deals over to other shops that were doing them, like, there's no reason we can't. So we started doing them as well. So it's been a newer offering for us. But so that's how I got into it and how I got where I am.
Yeah, it makes total sense, by the way. And I see that, to me, like, the landscape in general, like, it's just getting bigger and bigger. And as more of these platforms come online for the marketing side of this, which I do want to talk a little bit about that, jumping around a bit here, like, for the issuers trying to get in front of potential investors, like, what are you seeing?
Yeah, this gets into, things have been changing. So there's really, call it 3 ways, and it's really 2 with an asterisk, of getting, to me, kind of the 3 pillars of getting folks to engage and come into these deals and to make them, really succeed for the issuers trying to do it. One is, if you're a consumer-facing company in some way, if you have a consumer product, good or service, or even if you're like a step removed where maybe it's more B2B, but it's something that people can see. The end user or consumer of what you're doing is still a consumer person, and that they're going to see it and be aware of it so that they can maybe appreciate it. If you have something like that, then and especially if you've already been doing it for a while, so that you've got a community, if you've got a following and an audience, you're already kind of ideal for doing a crowd round. And not that other types of companies in other industries can't do it, but they just have a kind of steeper hill to climb to make it work. With you, if you're that consumer-facing company, you just go file and you come up with your marketing material. You probably already got marketing material because you've been building a community anyway, and you tweak it to talk more about an offering. but you've got a built-in audience already of maybe however many hundreds of thousands of people that you go push this content to, and plus they already like you. They already like your product. They're part of your community anyway. So selling them, they already are aware of what you do, and they already like it. So they're about the warmest leads you could want. And you see some companies that do this really well. They'll go leverage their own existing community. So that's the first one and easiest. It's also, again, it's not expensive because you've already built it. And the second is, well, if you don't have it, you got to get it. And this is very much like, if you were starting a business and wanted people to become aware of your product or service, you're going to run ads, you're going to market, you're going to create awareness through those various channels that people use to social and maybe emails and other things. So you go out and you find shops that can help you with that. And we know this is tricky too, because there are a lot of, especially as the industry was brand new, but even now, like some of the ones that are less effective have been weeded out. But there's still folks, if you don't know, if you're not a veteran of the space, we know who's been really successful and maybe who's had some trouble or hasn't been as successful. But so we help our clients partner up with the ideal groups for them and for their deal. But that's part of it. If you don't have a community, you're often going to need some kind of an ad budget. And people can, if you think about return on ad spend, and then which is the typical metric for an ad campaign, and you try and convert that over the cost of capital, which is the typical metric for raising funds, there can be some sticker shock there because people don't think of what you'd be willing to pay to succeed in an ad campaign might be a lot more than what you'd normally be willing to pay to raise money. But that's kind of what it is. And so if you've got a budget, and look, there's two different buckets there too. There's what you need out of pocket at the beginning to start one of these ad campaigns and marketing efforts, and then what you might spend over the entire course of the campaign. Because just like a normal ad campaign, you're going to reserve. We strongly recommend that our clients reserve a portion of the proceeds that they raise to say use of proceeds. We're going to roll a portion of this back into the marketing and keep spinning the wheel so that it keeps working. So it's not, if you just think about it in terms of the out-of-pocket cost, it can be manageable for at least a lot of companies that already have existing business and revenues or a robust investor base that get what they're trying to do and are willing to support that launch. The third, the little asterisk, is what I alluded to as far as the publishers. And it's really been amazing. Those of us who are insiders on this space and know who's getting covered by who and things like that, like, you could look at two companies that look very similar, and one may have raised millions of dollars, one may have raised 20 grand, and people outside are going, why did that one work? And that one, they got picked up, they got covered. And so those are the three kind of stools. The thing that's changed is the publishers there are one or two who are still doing it, but they've largely pulled back from doing it. There was an issue with one of the larger publishers. There was a guy, like a mid-level guy, who did some stuff he shouldn't have done and got in trouble. And it kind of, this fear ripple effect went through the space. And so there are plenty of other like good publications that weren't doing anything wrong. And they understood that the company itself didn't get in trouble, just the guy in the middle. But they all kind of like flipped out. And so they've pulled back. So there's one or two options that are there, but it's that much harder to get that free earned media coverage. So now the good thing for me and how we're differentiated is I've spent years, soaking in that space and that publication space. And there are folks out there who can be hired that can create that kind of content. So you get back into the spend bucket again, but it's a whole different way of reaching people, and it can be really effective. Like what I compare that newsletter kind of action and response to, even though these guys were not a newsletter, if you think about, remember the Wall Street Bets thing that happened with GameStop and all that, where they beat the shorts, and that was not a newsletter, but that level of engagement for those communities, between those publications and their communities, it's that aggressive. It's that game-changing potentially. So when you have folks who, they might be for hire now, but they still use some of the same trappings and the approach, and the guys who write the content that's engaging and exciting and gets people enthused about these deals, it's the same kind of content. So rather than just doing, or maybe you start with the social media, digital marketing, which is kind of the old reliable, especially if you have something more visually compelling about your company. But then maybe you go, all right, now that we've got this going, let's go hit some of these lists, because these guys have lists of hundreds of thousands of people that like news, they subscribe to newsletters, and they want to market to this kind of content to them as well. They call it IR. It's not really IR, but in their industry vernacular, it's the IR side of their business, and they want to shop early stage deals to their lists as well, and they convert pretty well. So we've got that whole universe ready to go too. So it's like multiple pronged attack, lots of different ways to reach people and get that community and get those funds rolling.
It's amazing. Well, Sean, this has been a lot of fun, and I'll tell everybody else a couple different ways to keep on learning more from Sean. He's number one at that Deal Flow event, so the Reg A and Crowdfunding Conference, definitely can attend that. And I know you're going to be speaking on a panel there, as we mentioned. And if somebody wants to keep the conversation up and connect with you and your team over at Entoro Capital, how do they do that?
Yeah, best way is probably email. You can drop me a line at slevine@entoro.com. It's SLEVINE at Entoro is ENTORO.com. And you can also find me on LinkedIn. That's SEAN, Levine, LEVINE. And if you see Entoro in connection with the name, that's me.
Amazing. And for everybody listening, just so you know, we'll put all that information in the show notes so that you can just head right on over and connect with Sean. And speaking of the audience, if this is your first time with Mission Matters and you haven't done it yet, hit that subscribe button. This is a daily show. Each and every day, we're bringing you new guests, new content, new ideas, and new things that are going to help you in your investing journey. So if that sounds interesting to you, again, hit that subscribe button because we sure do appreciate it. And Sean, again, thank you so much for coming on the show.
Been a real pleasure. Thanks for having me, Adam.